Hey guys, so in this video, to identify trade opportunities, make sure to click the subscribe button so that you know exactly when new content is released, as we have a lot of new things coming. A lot of you want more content on price action and understanding. Also right now, as we look at the comments, and we really enjoy hearing from you guys. So first, why are candlesticks important to understand? Candlesticks tell a story and are a reflection of what buyers and sellers are doing. What this means is the candlestick pattern that forms tells you a lot about what is occurring in that specific time period. Now, there are many ways to use candlesticks. We will be focusing on combining candlesticks, which we have been building on from past videos. So let's go through the specific candlestick patterns. Is the long wick candle. A long wick candle looks like this. And a pro tip, the longer the wick. So how do we use this candle type? Again, back to what we have been discussing. We look left and notice that price came up, hit and reversed drastically, giving us a good level of resistance. Now, as price came back up to this level, whether there would be a trade opportunity or not, what you do is, before deciding what to do, price action comes in many forms. Long wick candle that rejects resistance. So what does the long wick candle tell us? The long wick shows that buyers tried to push price higher, but failed, causing the wick to stick out. If buyers were in complete control, instead, with a big body showing momentum, these long wick candles can form as a result of profit, as well as sellers stepping into the market. Now there are also false breakouts that occur. So let's show this again. You look left. It hit and reversed drastically, giving us a key level of support. Then as price came back down to this level, at the level first, we had momentum loss through shrinking candles, with a big candle, a smaller candle. That is a very long wick candle, which caused the very long wick candle close, and then a bounce upwards. Now moving on. So the second candlestick type. This here is what an inside bar looks like. Is completely inside of the high and the low of the previous candle. So how do we use this candle type? Again, we look left, and on two different occasions price came up, hit and reversed, giving us a good level of resistance. As price came back up to this level, we had a candle where the wick is sticking out, showing a reaction to the level, followed by this inside bar. Notice how this candle is smaller, and the lows of the previous candle. So what does the inside bar tell us? It shows that there was momentum loss, because price failed to make a higher high. Now moving on. So the third candle type we look for is what we call a momentum candle. A momentum candle looks like this, where the candle showing a gain in momentum. So how do we use this candle type? We like to use the momentum candle, such as after a long wick candle or after an inside bar. So here's the pound cab. Hit and reversed, giving us a level of resistance, as price came back up to this level. rejections of this level now. Many traders will take trades, which is fine, but for more secure traders, you can wait for the bearish momentum candle. Are actually stepping into the market. Now moving on. So the fourth candlestick pattern we look for is multiple candle rejections. The name is self-explanatory. Multiple rejections means more than one candle rejecting a key level. So again we look left and notice price came up, hit and reversed drastically, giving us a level of key resistance. As price came back up to this level, this level of resistance 5 candles in total, where price tried to push higher but failed, creating a good short opportunity. So let's show this again. We look left and notice price came down, hit and reversed drastically. As price came back down to this level, had multiple candles rejecting this level of support. 5 total rejections creating a good long opportunity. So what does multiple canal rejections tell us? In terms of price action, it shows that price tried over and over again to push through the level. In this case here, sellers tried 5 times in a row to break lower and through support, but failed, causing these multiple longwood candles to form. So let's get into the psychology of all this. Think about this from a seller's perspective. If you got in short up here and held your position all the way down, in your mind, and once you see these multiple candle rejections, you are telling yourself. In contrast, from a buyer's perspective, you notice this level holding up. And in your mind, you are thinking that sellers might be taking profit, as well as other buyers possibly stepping in. Now, this is the key. And closing positions, as well as buyers entering the market, opening long positions. And once there are more buyers, this triggers a reversal. This is a very important takeaway. In terms of what other buyers and sellers are thinking with your trading decisions. Now, before we continue, make sure to hit the thumbs up button, as this lets us know you want more videos. Now moving on. So the fifth candlestick pattern we look for is shrinking candles, and as you should already know. But let's quickly recap. As price approaches a key level to show momentum loss. As you can see, price came up. When price came back up to this level, and an even smaller candle. And this was a picture-perfect example. Along with candle for extra confirmation. Now, this also brings us to our next candlestick pattern. As you can see, we had 3 green candles, which shows momentum loss. This complete pattern is also what we call a combo. You have multiple different candlestick patterns. You had the shrinking candles, which makes this a high-quality, short opportunity, which is combining candlestick patterns together. So let's jump to that. Now, in the section we put it all together. How to stack support and resistance. Can also stack candle patterns together to increase trade quality. So here's the euro dollar. You look left and notice price came down. As price came back down, second, we had a long with candle rejection of support. And third, a green candle finally appears after consecutive red candles. And this is also a bullish momentum candle. Again, notice. To improve trade quality. So, moving on. Here's a Swiss yen, and again, giving us a level of resistance, as price came back up to this level. First, along with candle rejection. Second, we had multiple additional candle rejections. Third, we had an inside bar, another inside bar. And fourth, a candle color change. Now, first we had a candle with the wick sticking out, showing a reaction to the level. This was then followed by a candle color change to red, after green candles. And then a perfect inside bar candle. So, moving on. Here's the Euro cat, and again. And notice that price was in a heavy downtrend before. Finally, there was a significant reversal that occurred. Now, as price came back down to this level. First, we had momentum loss through shrinking candles. And then an even smaller candle. Second, showing a reaction to this level. Third, we had a candle color change as we had two red candles, which shows momentum loss. Fourth, we had an inside bar, as his candle is smaller than the previous candle. Now, a lot of traders would look to go long, if they had intraday confirmation. But for more secure traders, which is our fifth trait, which is the momentum candle. As buyers actually stepped into the market, which causes this bigger candle to form. Again, stacking candlestick patterns in combination is a great way to qualify potential trade entries. Now, what we have showed you so far is just in order to take your training to the next level and understand how to use concepts such as time frame, market condition, as we continue to build on price action as a whole. Traits versus very high quality traits. So if you enjoyed this video, make sure to hit the thumbs up button and also comment below with your thoughts, as this lets us know you want more videos more often. So thanks for watching.